Hi, I'm Bert Nussbaumer from PreCopied.co.uk. Well, same topics, different week is all I can say. COVID cases in the US continue to increase and leading to partial shutdowns again in some of the areas. The US-China relationship continues to deteriorate. And really, we did have some better numbers out of the US, out of China, out of Australia, but for once the market really took the right conclusion. They're all June data, and given the way things look in July, with the partial shutdowns in some areas, we already know that the July data is going to be somewhat on the weaker side. Equities continue to disregard any kind of negative news, which I think is still a worry going forward, but right now the market just seems not to be bothered at all. The other story we have, the EU summit started today, which is going to last into Sunday, where they discuss the EU bailout deal, which obviously is the real highlight of the Friday or possibly the weekend into next week. If you get the sort of proposed deal, the 500 billion grants versus 250 billion loans, a sort of fiscal union by the back door, that would be very bullish for the euro, very bullish probably for the sort of like Italian bonds, Spanish bonds, and would probably mean that the dollar can finally roll over, something we will look at on the slides I'll show you. The first slide I have for you is away from the usual data. It's just something that we have to be watching, and we see that not all is good. So this is the loan loss provisions. We start to see obviously the same sort of story as we have seen in 2008. So the real pain to the economy is really only coming later in the year, when all these sort of programs that support some unemployment, etc., is running out. So without further stimulus, this is going to be a worry into the back end of the year. On the next slide, this is just really something to compare pre-COVID and post-COVID, and when we expect the economies to return to pre-COVID level, which you see in the blue. So this is maybe you can look after the session, but quite a strong language and a strong signal on how long it's going to take, and this definitely doesn't look like a V-shaped recovery to me at all. On the next slide, this only just as a quick, highlight on what the trouble is. Really shocking Q2 GDP in Singapore, 42% or 41.2%. This is really what we're up against, and if you think this is a sort of modern economy, we really start to understand what the challenges will be going forward for the global world, really. Here we have on the next slide, this is the euro dollar. We have tested 114.50 now twice. Once in the back end of May, again just this week, and we just can see from this chart what kind of level this is. A break of 114.50, which we will get on a bullish outcome from the EU summit, will start to push euro dollar back up to 117 and higher. On the next slide we have the DXY. Same here, this 96.03 level is this big next feeble support, which sort of stopped the dollar from rolling over. And obviously if we do get a positive EU summit outcome with the move higher in the euro, 96 is going to break in the DXY, and it's going to make room for the 94 area and possibly lower, after we sort of consolidated for quite a while now down here. So this break of 96 would be a key trigger to send the dollar quite a bit lower. The next slide, the good old Dow, we finally did close above the above the Fibonacci resistance. We did close above the 200-day moving average, which we run against most of June and July. We have in the meantime closed that gap from June up at 26,938. So if the market was just gap hunting on this move, the gap is filled. This is going to be the range now, like 26,200, 26,900, and that now will be the sort of next real trigger, whether we start to break down or we only fill the gap and the news finally does matter. I would see a move back down to 25,000. If you were to start closing above 26,900, then maybe the bearish equity view is just outright wrong, and we continue to grind higher, which I would think is a little bit of a, against the real fundamentals at this point in time. This is me, Bert Nussbaumer, PreCopied.co.uk. Thanks very much indeed.